Hey everyone, and welcome back into today's video. We have so much to talk about because there has been blood on the streets and the markets are going absolutely nuts. We've got crypto moving up 10-30% a day. We've got the general market up on the S&P 500 at all-time highs. We've also got so many of our favorite stocks, our growth stocks and innovation stocks, that are still continuing to sell off. And even yesterday, stocks like DDD were down 10% for absolutely no reason. There was no new news on anything. We had obviously ARK overnight sold some SPCE stocks. I believe the reason for this, guys, is that they are so invested right now in Coinbase IPO. So what they're doing is they're moving a lot of their money, obviously, from those longer conviction plays like Virgin Galactic, where they want, you know, maybe a bit more upside on things like Coinbase, which I do believe in the short term are going to move absolutely catabolically much faster than those plays like SPC, because SPC is such a long-term wealth builder. It's one of those stocks that if you're going to hold in your portfolio, you know, you're going to want to hold this for a very, very long time, because obviously commercializing spaceflight and obviously supersonic flight is going to take time. You've also got Chamath and also Sir Richard Branson selling shares of SPCE over the last 6 months. I think Chamath has sold almost all of his shares now, again, apart from his personal stake. And then you've also got Richard Branson that sold about 10%, obviously just a few days ago, just before the weekend. So obviously there's been a lot of negative catalysts in the markets, and this is why we are seeing some of the selling in obviously some of these plays. But what am I doing, guys? What am I doing? Well, I actually watched an interview recently with Cathie Wood, and something really interesting stood out to me. And she said that if anything is to enter her portfolio, they have to go through an absolutely excruciating research proposition. Now, in order for them to buy a stock, they expect a minimum return of 15% every single year over 5 years. Well, due to the recent market correction that started in February this year, we've seen such a dramatic shift, obviously, out of innovation and growth and tech into a lot of value and recovery stocks. And what's happened is she's saying now that actually they are expecting a minimum of 25% return every single year over the next 5 years, which is a much greater percentage if you look at that in compounding your money, compared to just 15%. And again, this is just the minimum requirements in order for it to then enter their portfolio. So nothing has changed on their original research, neither has it with me. And you guys know that we have many recovery plays that we talk about often on this channel. Plays like MP Materials, we have Disney, I've talked about BIP, Brookfield Infrastructure many times. We've even mentioned Canadian Solar, and there's also a few other plays that I am watching. And again, if you are a regular viewer of the channel, you will know exactly what positions I have been talking about there. So I'm still continuing to obviously balance my portfolio between these, and obviously I am updating the Patreon every single day with anything that does catch my eye, and any price alerts that I do actually pop out to these recovery plays, also to hedge in against the growth plays longer term, because there are some fantastic opportunities in the market every day, guys, and also some amazing companies. We even had Tattooed Chef yesterday sold off another 10% because the CFO left. It wasn't even the CEO, it was the CFO. So what's happening, guys, is there is so much obviously bad news, and a lot of people are in fact transitioning their money into crypto, which is why I made a video yesterday on Dogecoin. If you do want more information, then go and check it out. I will link it above now, because I am actually investing also some of my money into crypto plays, especially while there is a lot of bullish news and catalysts around everything right now that is in the crypto space, because the general markets are selling. And again, a lot of retail investors are now piling into crypto because they want that fast return. But again, it is a lot of hype, so there's a lot of speculation, there's a lot of volatility, but with volatility comes opportunity. And again, if you can capitalize on that and you know how to from a technical standpoint as a trader, which is what I teach about on this channel, then you guys are going to be fine. So what I am doing right now, guys, is I'm not paper handing anything. I have strong diamond hands. My conviction on a lot of the plays that are now going into the red, I am just holding through. I'm not too worried, and again, I see these as opportunities, in fact, to average down every month that I do get my paycheck. I did just want to come up on the graph because there's a stock that I don't really talk about much, and it's actually called CCIV. Now, Churchill Capital Corp, I know a lot of you guys will be holding. I decided to take profits on it about 2 weeks ago, when it was actually, you know, this falling knife. And this is because we have a lot of negative news right now about SPACs and SPAC mergers. The SEC are currently looking into how to get a new law in place, obviously, to make sure that everything is filed correctly, and obviously to stop all the pumping into SPACs, and obviously avoid the risk where, of course, you can see CCIV was up at like near $68 $28 at some point just a few months ago, and we have since had a gigantic sell-off down to $20. So they're trying to avoid these large moves to protect people, they're saying, but again, what it's done is it's acted as a negative catalyst. So what I'm doing right now is I'm trying to transition out of some of those SPACs until obviously some of the filings that are sorted. So what I'm doing right now, guys, is obviously I'm just moving some of my money around because I do think that these SPACs can still see some downward momentum. I do have my money in plays like Hyliion, and there are some other SPACs that I am also holding in my portfolio. Some of these I won't be selling, and I will just be holding for the longer term, but we are going to see a lot of volatility, obviously, while that news is apparent. And I don't think that right now CCIV are planning to capitalize on any revenue over the next few months, which is why I'm moving my money, because I think that this could still even protrude down to $15. And again, once it gets down to a valuation of $15, then that may be another chance to start looking to re-enter this position with a smaller risk allocation, obviously moving into the longer term as time goes on. But right now, that is what I'm doing with some of these SPACs. I did sell my position, like I said, in CCIV because I do want, obviously, that price to continue to come down before I, in fact, buy back in. And like I said, with all this bad news and negativity around SPACs, we could even see a further downward momentum into plays such as Churchill CCIV. PALANTIR had released some news yesterday as well, and they are opening up some of their software, their Foundry software, to the public for free. And there was obviously some selling in PALANTIR yesterday. We were down almost 3% on the day, and we are back down below that $22 range. So again, these are some nice price ranges potentially to start to re-enter, especially if we do get below that $20 price range. That is going to be a nice valuation then to start, in fact, piling more capital into this stock for the longer term hold. But it is worth noting, guys, that a lot of Wall Street right now are pushing those prices down. They're trying to weed out, obviously, all the retail investors by obviously selling and shorting stocks and using options. And of course, unlike big institutions and banks and Wall Street, you know, they can hold for years and years, and that's what they really have their mindset set on. So they don't really worry about the short-term noise and volatility. But retail investors like me and you, I can guarantee you that about 80% of them obviously have paper hands. And as soon as they see red, they start to panic. So it's so easy for Wall Street to come in, see that obviously they are holding, retail investors are holding maybe 60% of the allocated shares in something maybe like NNDM, and then they will start to short NNDM, and it will push the price down. And once it starts to go in the red, 60% of those retail investors, maybe about 50 to 60% of them, will start to sell out, which is going to push the price down even further, which causes panic, and you can see where this goes with momentum. So this is what's happening a lot of the time in the markets right now, and as soon as it gets to a place where Wall Street are happy, they will then put out positive news catalysts seeking alpha articles, and they will be buying up those shares, guys. So all it is, guys, is it's just short-term noise and volatility, and you need to be aware of how Wall Street works, because this is what they do. This is how they create, obviously, massive gains in the billions of pounds as these hedge funds make, because they short stocks, they push out the retail investors, then they buy back in stocks when they're cheap, and then obviously the momentum comes back in. And once the momentum starts coming in, the retail investor goes, I want to now buy it at all-time highs, because they have the wrong mindset. So guys, it is about holding through those bouts of volatility, and in fact buying at a cheaper price, because in fact what it does is it lowers your risk, as I keep saying on this channel. And are you a long-term investor or a short-term trader? Because moving into the future, guys, if you hold on to the shares, look at the S&P 500, guys, over time, you can see that, you know, the history will always repeat itself. We are continuing to go up, despite the fact that we do have those layers of dips. Why? Because companies are improving, and obviously with every added cumulative doubling of manufacturing for certain companies, there is actually a good deflationary force, and that is going to be cheaper for them over time. So this is why I am still investing, and I want to be inside these companies right now, because we don't know when that shift is going to happen back to growth and innovation. It could happen tomorrow. It could happen in a year. We don't know, but I would rather have my money in it, so that obviously once it does happen, I will be able to capitalize and cash out on it, rather than just sitting on the sidelines and hoping to time the market. Because it's always better to have your money in the markets rather than trying to time the markets. And if you're dollar cost averaging in over the course of several years, then guys, you will get the best average price. There's obviously no doubt about that. That has been proven from history. So just a Tuesday morning pep talk, obviously from me, with a few little insights as to what's going on, some of our top plays, obviously SPCE. Guys, if you would like any full reviews on any stocks, do be sure to leave them down below in the comments. Right down below in the comments. I hope you found this useful, insightful, and obviously anyone that is worried with those paper hands, you know, you're seeing a lot of red. I hope this gave you, again, some more conviction as to what's happening in the markets. And what I'm doing, I'm holding through, obviously, and I'm just buying because I think this is a fantastic opportunity. We have an opportunity where we're still in a bull market. There's so much money being pumped in, guys, from the Fed, from stimulus, from so many sources. And once, obviously, a lot of people are vaccinated, we're also going to see the spending of trillions of dollars that people have held onto in the economy because they haven't been spending because they've been worried about their jobs. So we're also going to have another influx of cash moving into the next few years. So this is why I'm buying in stocks right now, despite the fact that they are down. And I'm just hoping that you take something away from this pep talk. If you were worried, then be sure to smash that like button for me and join the family if you are new, and welcome to this family of investors by hitting that big red subscribe button. So guys, I'm going to end the video there. Again, if you would like me to do any full reviews on any companies, let me know below. I am going to try and get out a full review on Tattooed Chef and Tesla at some point this week, so be sure to stand by for that. And I'm also going to dive deep again into Palantir and maybe some Hylian or SPCE plays, again depending on what news does come out moving into the next week. So that wraps this video up. I hope to see you guys back on my channel soon for some more content on investing. Stay safe, and I'll see you guys soon. Ciao.